Okay, so if you're a real estate agent, you know this feeling, right? You've got this great property, but in this market, with interest rates being what they are, it's just sitting. The weeks start to feel like months, and you're just waiting for that one perfect, bank-worthy buyer. But what if there's a totally different way to play the game? Today, we're going to dig into a strategy from our source material that's designed to do just that, break the stalemate.
All right, let's dive right in. The whole idea here is how do we get these properties sold fast and for top dollar? Well, it starts by completely rethinking who your potential buyer even is.
So, what is the real problem? According to the source material we're looking at, it's that we spend all our time, all our energy chasing this one very specific type of buyer, the one who can stroll into a bank tomorrow and get a loan, no questions asked. And that's the trap, right? This old school approach means you're leaving fantastic properties to just linger on Zillow, on Redfin for way, way too long. You're basically fishing in a very small and super competitive pond. So what's the fix? Well, instead of narrowing your focus, the idea here is to basically open the floodgates. The source calls this temporary seller financing, and it's all about dramatically widening your audience.
Okay, let's just be super clear about what seller financing means here, because it can sound a little scary. We are not talking about your client becoming a bank for the next 30 years. No way. The key word here, and it's a big one, is temporary. Think of it as a short-term bridge to get the deal done and the property sold.
And this slide really lays it all out, doesn't it? I mean, look at the contrast. On the left, you've got the traditional buyer, a slow, rigid process for a tiny group of people. But on the right, you're opening the door to a much larger, untapped pool of buyers who are already pre-screened and compliant. And the real kicker? The potential to close the deal in 45 days or less.
Okay, that sounds great in theory, but how does this actually work for your client and for you? Let's unpack the benefits, starting with the one number every single seller wants to see.
100%. Yep, that's the big claim from our source. The idea is, if your client owns the property free and clear, they can sell for their full asking price. I mean, just think about that for a second. No haggling, no lowball offers, just 100%.
And here's how the cash actually flows to your seller. It's not just one big check. First, they get a significant lump sum right at closing, to help them move out and get settled. Then, they get this steady, passive income for a set period. And finally, boom, a big balloon payment down the road to get the rest of their money. It's a totally different financial structure than a typical sale.
Now, the most important thing to see here is that this entire model is built to minimize the risk and the hassle for your seller. You've got a third party handling the payments, the buyer is required to have insurance, the whole process is designed to be as hands-off and as secure as possible.
Of course, an approach like this is going to raise some eyebrows, and you're probably thinking of all the what-ifs right now. That's totally fair. So let's just walk through the 5 most common objections or excuses that agents usually have.
This one's a biggie, right? No seller wants to become a landlord or a bill collector. It's a completely understandable and honestly very common concern.
And the answer is simple. They don't have to. Your client collects absolutely nothing. That entire administrative headache is taken completely off their plate. A professional company handles everything. And get this, the buyer is the one who pays for that service.
Okay, here's another huge hurdle for a lot of sellers. They're selling their home to get that equity out, and they need it now for their next house or maybe for an investment.
And this is a really important point of clarification. While it's true it's not 100% of the cash on day one, the model does provide a significant lump sum at closing. So there's a trade-off. They get immediate funds to make their move, plus a structured future payout that ends up totaling their full asking price.
Now we're talking about risk. What happens at the end of the term when that big balloon payment is due? What if the buyer's financial situation hasn't improved and they still can't get a traditional loan? That's a scary thought.
Well, the system has 2 big safety nets built right in. First, the buyer is vetted from the very start to be compliant with all the financial regulations. And second, and this is critical, they are required to purchase and maintain mortgage protection insurance. That insurance is there specifically to protect the seller in this exact scenario. And now, we get to the bottom line for you, the agent. You've done all the work, you found a creative solution for your client, but are you going to get paid on time?
The answer here is direct and really couldn't be clearer. According to the source material, yes, your real estate commission is paid at the close of escrow, period, just like it would be in any traditional sale.
And finally, the professional concern. As an agent, you have to be incredibly careful about your partnerships and who you collaborate with to protect your license and your reputation. That's your livelihood on the line.
And this is a really important distinction. The relationship is framed very specifically. You, the agent, aren't partnering with this company. You are utilizing a specialized third-party service to get your client's listing sold. It's positioned as just another tool in your professional toolkit.
So, after going through the problem, the proposed solution, and hitting all the big objections, what's the big picture here? What should you take away from all this?
And that's really the question this whole approach leaves us with, isn't it? Could a new way of thinking about financing be the key to unlocking your toughest listings and actually getting them closed in 45 days or less? It's a different way to think about the game, for sure, and definitely some food for thought as you tackle your next challenging sale.